If you're a landlord here in the UK, there is a conversation we really need to have as we head into 2026. You see, HMRC is looking much closer at rental income now, and they're digging into tax returns from years ago. It's causing a whole lot of stress and confusion. So to clear things up, we've teamed up with the tax experts at ProTax Accountant to break down exactly why this is happening and, more importantly, what you can do about it.
Right, let's start with a big number, £500 million. That is what HMRC estimates it's losing every single year from rental income that just isn't being declared. It's an absolutely massive figure, and honestly, it's the number one reason landlords are now right at the top of HMRC's priority list.
And that £500 million gap? Well, it explains everything. This isn't about random checks anymore. HMRC is now actively hunting for these gaps. And as we're about to see, they have some seriously powerful technology to connect all the dots. So, to make this all really clear, we've broken it down into 5 key parts. First, we'll look at why landlords are under the microscope. Then, and this is the interesting bit, we'll cover how HMRC knows so much. We'll talk about the law that lets them look back years into your past, what to do if you get that dreaded brown envelope, and finally, the right way to get everything sorted.
Okay, first up, why all this focus on landlords? Look, you need to understand, this isn't personal. For HMRC, it's all about plugging that $500 million hole in their tax revenue. The thing is, the rental market is just a massive area where income can easily slip through the net, and often it's because of a genuine misunderstanding, not someone trying to pull a fast one.
And you know, this is a thought that catches so many people out. Maybe you're a freelancer in London with a single buy-to-let property, or perhaps you're renting out a room in your place in Manchester just to help with the bills. It's so easy to think, oh, it's just a small amount, it'll probably fly under the radar. But here's the thing, there really is no radar to fly under anymore. Right, let's get into the next part, because this is where you see how it all connects. Forget that old image of a tax inspector buried under piles of paper. We're in 2026 now, and HMRC works more like a tech giant, pulling together a massive digital web of your data from all sorts of places. You'll definitely want to hear this bit. Just take a look at all the places HMRC gets its information. They know you have tenants because of the tenancy deposit schemes. They know you own the property from the land registry and your stamp duty records. Your letting agent, your bank, your mortgage lender, even the electoral roll can flag up that you have a second property. And yes, they even get tip-offs from informants. Every single one of these is a breadcrumb. Now for the pro tip. All of this data gets fed into this incredibly powerful supercomputer system they have called Connect. What it does is simple. It cross-references everything. So it sees you own a rental property, it sees a tenancy deposit is registered there, and then it looks at your tax return. If it can't find any rental income declared, bang, an alert is automatically flagged for an investigator. It is ruthlessly efficient. So we know HMRC has the data, but what about those tax returns you filed, say, 3, 4, or 5 years ago? You'd think they're done and dusted, right? Safely in the past. Well, not quite. The law actually gives HMRC a very long memory, and this is where a lot of landlords get caught out. Stay with me here. This next point is crucial for anyone who's ever filed a tax return. Let's break this down. Normally, HMRC only has 1 year, just 12 months, from when you file your return to open an enquiry. After that, the window usually closes. But, and it's a big but, there's a major exception called a discovery assessment. This gives them the power to reopen a tax year long after that normal window has slammed shut if they discover tax has been underpaid. And this isn't some new rule. This power comes from way back in the Taxes Management Act of 1970. To put it simply, it's the legal crowbar that lets HMRC pry open old tax years to collect money they think was lost. It basically overrides the standard time limits, giving them a second bite of the cherry. So, how far back can they actually go? Well, for a standard discovery, maybe an innocent mistake, they can go back 4 years. But, and this is the part that catches people out, if HMRC believes the error was because of carelessness, that look-back period stretches to 6 years. And trust me, their definition of carelessness is probably much broader than yours. So what on earth is carelessness in the eyes of HMRC? It's important to know this isn't about deliberately hiding anything. The law simply defines it as a failure to take reasonable care. That could be anything from not double-checking your figures, making a simple calculation mistake, or not keeping proper records of your income and expenses. It's all about what a sensible, careful taxpayer would have done. And that right there is the absolute heart of it. The focus isn't on the mistake itself, it's on your behavior. Did you do everything you reasonably could to get it right? If you can't show that you did, HMRC can, and often will, argue it was carelessness. And that means they can go back 6 years and hit you with higher penalties.
Okay, so let's make this really practical. We know why they're looking and how they can look back. But what happens when they actually get in touch? Well, for most landlords, it all starts with something called a nudge letter.
Now, a nudge letter is not a formal investigation. Think of it more as a warning shot. It's an automated letter that basically says, hey, our computer says you have rental income, but we can't seem to find it on your tax return. You might want to have a look and fix that. It's their way of giving you a chance to sort things out before they start a formal inquiry.
So if that brown envelope lands on your doormat, here's exactly what to do. First, take a breath. Don't panic. But whatever you do, do not ignore it. Burying your head in the sand is the worst possible move. Check your old tax returns for the years they're asking about, and make sure you respond before that 30-day deadline. But most importantly, this is the time to get professional advice from an expert, like ProTax Accountant, so you know exactly where you stand before you write back.
And that brings us to the final and most important part, the solution. If you've realized that you've made a mistake, whether it's for 1 year or many, there is a clear, official path to get everything straight. It's all about you taking control of the situation before HMRC does. HMRC has created a specific program just for landlords called the Let Property Campaign. It's designed for anyone who needs to declare rental income from previous years. It's a structured, manageable way for you to come forward, tell them what you owe, and get your tax affairs completely up to date. Now, this might seem complicated, but the process is actually pretty logical. First, you just let HMRC that you're going to make a disclosure. They then give you 90 days to work out exactly what you owe. That's the tax, any interest, and the penalty. Then, you submit that formal disclosure with an offer to pay, and finally, you settle up. So why on earth would you do this voluntarily? Well, the benefits are actually huge. First, it completely clears the slate and brings everything up to date. Second, the financial penalties for coming forward are almost always lower than if HMRC has to launch an investigation to find you. But honestly, the biggest benefit is just the complete peace of mind, knowing that everything is sorted. So what's the key takeaway from all of this? It's that being proactive is always better than a last-minute scramble. With HMRC's technology today, it's really a case of when they find undeclared income, not if. Taking control yourself is the smart move. The only question left is, where do you begin?
Look, if anything we've talked about today has raised a few questions, or if you think you might need help with the Let Property campaign, the best thing to do is speak to an expert. The team at ProTax Accountants lives and breathes this stuff, and they can give you clear, practical advice. All their contact details are on the screen now, and while you're at it, you can subscribe to their YouTube channel for more updates. And just to finish, a quick but important disclaimer. Please remember, the information we've shared is for general guidance and is based on the rules as of January 2026. Tax can be incredibly complicated, and everyone's situation is different, so this isn't a substitute for getting proper professional advice. We really do recommend you speak to a qualified advisor, like ProTax Accountant, before you take any action.